on, so to speak, in Italy right now, enjoying himself on a little jet-setting tour of Europe, so to speak. But he will be joining next week. But joining me this week is Thomas, our head of marketing. He just joined a little while ago. And if you've noticed a bigger presence on social media, bigger presence on content, it's largely in part due to the gentleman to my right. I believe you're to my right, but anyway. So this is Thomas Horcel. We'd love to. I mean, Thomas, welcome to the show. Welcome to the AMA, or live now as we're rebranding it. So I'd love it if you could just give a brief background to the audience.
Yeah, absolutely. Glad to be on. I know Joey's busy jet setting around the world, so happy to fill in the gap before his comeback next week. As for me, yeah, I've joined the team fairly recently. I think it was towards the end of March. Got started with Mogul. My background, mostly for the past 10, 12 years, has been in the entertainment industry, sports, gaming, and the wider influencer space. Initially, I was going to University of Hong Kong, looking to get into finance. Dabbled a little bit of private equity and investment banking, but quickly realized that being Brazilian, my true passion at that time was around soccer. Myself and some friends in high school could not stop arguing about pretty much every single thing when it came to soccer, and we started our own podcast. And that was about junior year of college. That ended up taking off fairly quickly, so we made this fun little podcast into a fledgling media company, mostly working with university students around the world who were into soccer. I did that for a few years, and then after that, quickly realized that not only with soccer but so many of the other bits of the online space, there were so many similarities across them, and with that in mind, I started working with different creators who were looking to scale on social media, to scale with video content, original content, and started doing some consulting with different athletes. And eventually, a company in the UK had just launched an esports team for Gareth Bale, the former Real Madrid player. They came to me looking for some help scaling up the company early on. I joined them, and then COVID hit. So what was initially supposed to be a focus on esports got shut down, as most things did back in 2020. I was in London at the time, and quickly we pivoted to starting online events where we had, different celebrities, different athletes, and different influencers all coming together to play different games when everyone was at home. We ended up doing three of those events, had about 150 participants across all of those, over 10 million live views, and ended up creating a lifestyle brand in addition to the esports side. Um, After being of 38 for about a couple years, I ended up doing mostly my own talent management agency, where myself and my co-founder at the time, we essentially found a niche where a lot of people were making a lot of money behind paywalled websites, and we're looking to expand into a more mainstream audience. And that's where we came along and essentially opened new doors for them with, TV appearances, traditional media, but really just diversifying their content and showing their fans a new side of them that they maybe hadn't seen on socials. Scaled that fairly rapidly. In the UK, primarily, we had up to 23 creators under our management. And all in the meantime, I was doing a lot of consulting as well for different athletes, primarily athletes who were coming to me and saying, hey, I have a big following on Instagram. I have a big following just in general across media, but I want to start doing more of the stuff that I like to do outside of sports, right? Maybe it's gaming, maybe it's content creation to some extent. And so my job was essentially to advise them on how they could go about creating that brand outside what you see on TV. Did that as well. Eventually moved to Phoenix, where I've been for the past year or so, and now obviously with Mogul and moving to DC soon.
Perfect. Well, thank you for the background. Obviously, pretty remarkable given consumer economy has, or influencer economy has become a massive thing, and going across every different variety of it. It's been incredible to implement within Mogul. But I guess right off the bat, why did you join Mogul? Obviously, you've done a number of things incredibly successful across a number of different mediums, whether it be the influencer side, whether in largely concentrated in football, but obviously in the agency side too. Why, when you have this choice of every other company to join from the marketing side, why is it that you chose Mogul?
I think number one, first and foremost, having been on the startup side, both for my own companies and working with other startups, you have to believe in the founders. And obviously, when I first met with yourself and Joey, straight away I could see that there was not only the drive and the passion to make this into an absolutely massive company, but really the belief that we could come together as a team and achieve those things. So that for me was the first key factor. Number two, I love being a part of startups. It's it's stressful, but it's so rewarding, and it's one of those things where every single day you come into the office and you think that anything that you believe you can achieve, you just need to put your head down and work towards that. And lastly, as well, I think just being in real estate. My dad used to be in real estate when I was growing up. I haven't been in real estate for a long time, but it was something that has always fascinated me. So being able to sort of bring my experience from the more conventional influencer and entertainment side and bringing it into the real estate medium was definitely an interesting challenge, and definitely one I'm happy I chose to take on.
Well, we are grateful to have you. It's been incredible so far, and thank you for the kind words about the founders. But I guess with everything that's been going on right now, and obviously the current macroeconomic climate, but also the properties on the horizon and the properties that we've had to date, I'm curious about what you're most excited about here at Mogul, broadly speaking, around the product, around properties, around pretty much anything that you can think of.
Yeah, I think on the platform side, I think just our ability to deliver consistently high returns that we've proven so far, and I hope we will continue to prove going forward. With Mogul, you're investing not only in a much more streamlined way than you might with other platforms or other mediums in real estate, but we're really bringing numbers like the Roman, for example, that we recently announced with the 2.6% monthly cash on cash. Those are the types of numbers that I think differentiate us from a lot of the other players, not only in the real estate space but in the wider investment space. So definitely exciting to just be continually providing that to our customers and potential new investors. I think on top of that as well, just the ability to make real estate so accessible to everyone, right? When you join Mogul as an investor, you can invest anywhere from $250 to, into the six figures, and it's really up to the investor. And I think a lot of people, when they look at real estate, think that it has such a high barrier to entry, which in a lot of ways it does. But here at Mogul, we're able to not only facilitate that with premium properties that we're offering, but really facilitate the whole process. So as we scale, being able to target these different audiences and engage with them in a way that's going to bring them not only a lucrative return on the investment side, but also an engaging customer experience across the board that we're looking to facilitate as a platform and as a team. It's definitely exciting, and I'm really excited to see what's to come this year and present to our wider audience.
Yeah, I mean, you mentioned it, and we'll obviously go into it a little bit more in detail. But the property updates are absolutely stellar. We continue; the properties continue to crush absolutely on a rental income basis, but on an appreciation basis. And I mean, that got me excited. And definitely check out the properties if you haven't at mogul.club and get investing for, as Thomas mentioned, $250 or up. I guess jumping into a little bit more behind the scenes, obviously real estate is one of the highest pay gated avenues to invest in. You have the realtors on one end, the title insurers on the other, the escrow accounts, everything in between. And it's such a massive barrier to enter, not only from a knowledge but a capital perspective. What's one thing that you've seen peeking behind the wall, so to speak, on the other side, on using us as an example, or maybe even just properties we've looked at as an example? What's the biggest reveal or takeaway that you've seen that you were kind of shocked about in the real estate world, coming from outside of the world of real estate?
There have been quite a few. I think just number one, the ability to invest in real estate is not as accessible as it should be, in my opinion, to a broader public. Be it from a capital perspective, like you mentioned, be it from all the closing costs involved, the process, the due diligence that needs to take place for you to find the property, vet the property, then close on that property. On top of that, you then need to manage that property, and you have so many things that are going on that you need to be taken care of. And I could see why for first time buyers who maybe are investing in real estate and like single family rentals, I could see how that could be very overwhelming. And, I had never personally invested in real estate myself beforehand, but seeing these challenges and seeing what we're able to provide as a platform, makes it to me that, makes me think that we are onto the right path here because there's so much going on. And if we can just facilitate that journey for you and at the same time bring you properties that maybe you wouldn't be able to come across or wouldn't find returns similar to the ones that we're offering, it's very encouraging to see. So Definitely the ease of access and the accessibility is just it's way harder than it should be in my opinion, and I'm glad we're making it, one step at a time more open and more accessible to everyone.
Definitely, definitely could not have agreed more with that.
Yeah. And I mean, that's quite a few questions for me, Alex. So maybe I could just throw some back to you because, for the past few weeks, I've been chatting to a lot of our, existing customers to potential investors. And there's some questions that seem to always come up when I'm on these calls. So I thought maybe we could go over some of them. I know some of them you have brought up before, but they keep coming up, so we might as well bring them back and let the people know. So I think to kick off, number one, tax benefits, right? We talk about tax benefits a lot at Mogul and what we're able to provide as a platform. And sometimes I tell people, and they say, this almost sounds too good to be true. And we then need to explain to them how we're able to do what we do as a platform on the tax side. So, yeah, would love to hear a little bit more about that and hopefully shed some light on it.
Yeah, no, definitely. Tax benefits and real estate go hand in hand. If you think about why it is that the billionaires of the world don't pay taxes, it's in large part due to real estate investing and real estate holdings. And so, if you think about what happened back in the day, but when the IRS was first writing the tax code, they wanted to incentivize home ownership. As a result of incentivization for home ownership, they gave specific tax breaks as it related to real estate holdings. One in particular that we quote a lot because it's kind of the most tangible is this depreciation tax shield. And so, with that, you can use depreciation against your rental income from your property. What that means is, even though your property is appreciating in value, you can actually use that asset value over time as you straight line it and put it up against the rental income you receive. As an example, if you were to invest in a REIT that doesn't pass along these tax benefits to the end users, but claim that they're a way of investing in real estate, which is just absolutely false, you get a 10% yield, maybe. That 10% quickly becomes 5% post taxes. With us, you receive that depreciation tax benefit shield, and so that 10% not only stays 10%, but turns into a passive loss for the purposes of tax reporting season. So at the end of the year, you're going to receive a tax document that you can slap on the back of your tax returns that shows up as a passive loss, even when that 10% is sitting in your bank account completely tax free. So that's a little bit more about the tax benefits behind real estate. And people are always claiming real estate is the most tax efficient investment. And it's very true because you can use a lot of these quote unquote ghost expenses against your tangible income from the property. So those returns that we quote, a lot of them are post tax because you can use this tax shield. So that's a little bit more about the tax benefits behind
Amazing. I might just have that video ready for next time someone undoubtedly asks that. Just have that all ready to go.
it.
Um, Another one that gets brought up fairly frequently is in terms of the properties that we have on the website. I know people are always curious to know how many properties do we have on offer right now? How many properties are we looking to have in the near term, in the long term? So it'd be great to hear a little bit more from you as to, A, what we have on offer, but B, how we're looking to scale on the property side and what we're offering to investors.
So currently we have 4 properties up on the platform to date, all of which across the board is an 18.8% projected IRR. That being said, that 18.8 is quickly becoming a lot lower than what we're expecting, given just the current returns to date, especially across all the different properties. Now, on the near term, we have a few more properties coming online over the coming weeks as we look to scale up. By the end of the year, we're having millions, tens of millions, hundreds of millions of properties on the platform. What does this mean in terms of for a user and the inventory that we're looking to bring to the platform? We basically have a never-ending revolving line of assets ready to go and ready to be brought to the platform at any given time. Because we form programmatic relationships with these inventory partners, whether it be across the property management side, on the investor brokerage side. And as a result of this programmatic relationship, we provide a buy box at the beginning of each month, custom tailored to the markets that we're looking into. And so we say these are the certain levers that we're looking to pull into. These are the financing that we can get based on a specific debt service coverage ratio, which we can get into later. But these are the return thresholds. We underwrite things to a 12% minimum hurdle rate in a bear case scenario. So in a worst case scenario, if that property is returning an 11% IRR, we won't even touch it. We'll kind of move on to the next one. Now, that 12% barrier is not what we're targeting that 18% plus. It just so happens that when you think about real estate investing, you have to think about downside risk protection. And in this case, a 12% is that downside risk that we mitigate against tremendously well, given we underwrite it so conservatively. And so the properties that we have coming up, we have hundreds of millions ready to go at any given moment with this high returning threshold. And right now, we're looking to deploy a lot in the near term and bring a lot more properties to the market for you all to invest in.
It's definitely exciting, and I think definitely in line with what we've been seeing at Mogul, that we just want to offer people the best possible properties, but also have a lot of options available. And I think as a platform, that's definitely something I'm excited about from the marketing side, because it makes my life a lot more interesting, being able to promote all these different properties and come up with different creatives for each one. So definitely going to be a fun few months ahead for us, and I'm sure for investors as well. On that note, Alex, just maybe moving on to the wider real estate market, the macroeconomic side of things. Are there any specific trends or things you've noticed in the past week or in the near future that you'd want to cover on this call?
Yeah, I mean, when you think about what's happening in the real estate market, a lot of it centers around this interest rate environment that we found ourselves in. And it's because interest rates are so integral in real estate investing, because it determines the amount that you can purchase with the amount that you have to put down and the amount that it touches every facet of real estate investing. And so with interest rates being higher, you have a lot less purchase power, which means that you can't buy as many assets with as little down. Not to mention, on top of that, you're not going to get as high a return because you have to pay debt service up to a certain threshold, which mitigate or cancels out part of your rental income cash flow. Now, this is actually a pretty interesting scenario, because I just read a stat actually earlier this morning that said that given the current interest rate environment, I believe the exact number is, the exact number is 27.5 million households are able to afford homes today in a 7.25% interest rate environment. Now, if it were to fall by a full percentage point, about 2.5 million more homes could be actually purchasing these properties. That means there aren't a lot of buyers on the market, relatively speaking, but at the same time, there's not a lot of supply. So this interesting dynamic at play means that something's got to give, whether it be prices coming down or buyers just coming back to the market and pushing them a little bit up. And so, in my opinion, once there's a whiff that interest rates are going to come down is when you're going to see a lot more activity and a lot more inventory turnover, as it's called. And so right now, it's an absolute buyer's market. There are Business Insider articles that just came out this week that said a lot of sellers are settling for purchase prices that previously would have been untenable, concessions that would have been untenable in the previous buying market spree. And so we at Mogul, because we're sitting in a position of dry powder right now that we're looking to deploy in the near term into a lot of properties, we can use that to our advantage for our end users. And so because a lot of these people are priced out of the market today, we can get a lot of concessions on the properties on the onset, which allows us to buy them at a more attractive basis, which allows us to get better debt, which allows us to get more cash flow today. In the end, a higher return to the end user. And so that's what our focus is in, using this time and this state of paralysis in the market as a means to go out and buy the absolute best market opportunity. And then once that interest rate comes down, it's going to absolutely explode, and there's going to be a frenzy again, in which point a lot of our investors will be able to recoup and say that they bought at the exact right moment.
Yeah. And on that note, I think that's a nice segue as to some exciting news that we had on the Mogul side this past week. Maybe a sneak peek without fully revealing what's coming up next week, because I know we have some really exciting updates as well coming up. But maybe just to recap some of the really cool stuff that happened this week on the property appreciation side, new tenants. I know a lot happened. So yeah, over to you, Alex, wherever you want to start with this one.
I mean, across the board, I think we just start with the headliner, the Logan, absolutely crushing it. I mean, it's ridiculous how well the Logan has done, because not only is it a cash cow from a rental cash flow income perspective in the near term, and we can get to that later as to what's on the horizon, but on top of that, we bought it as an incredibly attractive basis, which means that it's a 14 current comps in the market point to our property, the Logan, actually being 14.7% higher than our purchase price, which means that goes to the end user. But why does that matter? 14.7 in and of itself is a ridiculous number to quote. But on a leverage basis, that means it's about 25% plus, which is absolutely ludicrous to think about. So you put in a dollar, you're getting 25 cents on that dollar today in less than a year since people have invested in it, which is absolutely ridiculous. That's the Logan. The San Bernardino County area has been blowing up along the Inland Empire. The market data just continues to point to even higher market value growth, but higher rent growth as well. Not to mention a little bit of a sneak peek into next week. We have some pretty incredible bookings that are not only going to cover, but potentially cash flow for that one. So we'll be giving market updates. Keep in mind, we have a new property updates kind of update in your individual portfolio page. You can see on an individual property by property basis based on your holdings, but also you can look in the individual properties and see property updates as they happen in real time, so you can stay up to date and in tune as to what's happening with that property on a weekly basis. Now, that's the Logan, which is absolutely ridiculous. Did I miss anything on the Logan before I head into anything else?
No, I mean it's definitely excited for next week as well with what you just mentioned, but we'll save that one for next Tuesday.
So, on the topic of appreciation, we can't talk about appreciation without the Kendall. We bought it at a ridiculously attractive basis, and today it's sitting about 7% above purchase price. That's a roughly 9% levered return on just appreciation alone. So that means if you had bought into it at a dollar, you'd be getting 9 to 10 cents back on just appreciation alone. Not to mention the cash flow from that is coming in the near term, which is going to be absolutely ludicrous in the near term. And so Dallas continues to be a ridiculous market for us. We love to look into Dallas. The dynamics at play, the levers at play are absolutely absurd. And so if you were talking more about the Dallas market, we can't help but talk about the darling of the platform, the Bowser. And so the Bowser, the tenant just moved in on a 12-month lease on 4,100 per month. This is a 6.5% increase year over year on the rental income for that property. Not to mention, on top of that, the property manager has said that the tenant has moved in and they can't like the property. Direct quote is, the tenant has loved their time at the Bowser, saying it's been a perfect home for them and couldn't be happier. So ridiculous property in a ridiculous area that's already 98% return on a very conservative basis, mind you, not to mention the cash flow that's coming on. We were able to pass along a sub 3% mortgage for that one. Now, on the Roman, just continues to go along a ridiculous clip. So within the first week of March or of May, it actually had 1/3 of its month of all nights in May booked, which means that if we're sneak peeking a little bit, it's on track to break some records potentially. And so what that means too, we had 3 total bookings, but all of them for a really long period of time throughout the month of May. Over 1/3 of the month of May is already booked out. And so that means that will be sent out in June, the dividends from these May bookings, which means that we're looking forward to a pretty happy June for everyone that's holding the Roman property. And Houston market continues to clip along at an increasingly fast pace, especially from a market value and rental income perspective. So a lot of really cool things. I would invest in any of the, I can't give investment advice, and this isn't investment advice, but I'm personally invested in all the properties. I believe in them. This is our reputation on the line, and I'm fully invested, as are a number of the people on the platform. So absolutely incredible things there. Don't think I missed anything unless you have any last things that you want to say on that front.
No, I mean the numbers speak for themselves across the board. You know, we haven't had a slow week for any of the properties, and I think the Roman specifically, right, with those numbers that it just keeps putting up. When we had the 2.6% monthly cash on cash, remember my headline for it was record-breaking numbers, and it's getting silly at this point because potentially these next numbers that we might reveal might be even better. So you know, the Roman just keeps going from strength to strength, but so do the other properties as well. And I know the Bowser's obviously sold out already, but going forward, there's still a chance to look into the Kendall, the Logan, and the Roman. So definitely really exciting. And I think with the news that are coming out next week as well, will be a good one for the investors.
Well, I mean, I think those are all the updates that we had this week. I know it was a little bit shorter, unless I'm missing anything, but I know it's a little bit shorter than usual. But tune again next week. Thank you again for Thomas for coming on such short notice. You did an absolutely phenomenal job. we'll be back in the studio or in the lab, so to speak, with Joey next week too, as he comes back from his jet-setting trip of Europe. And with that, thank you all. Go check out the properties, invest in them if you haven't before they sell out, because the returns are astronomical, and we're incredibly excited for what we're building here at Mogul. So with that, I mean, Thomas, did you have anything last minute that you wanted to say?
No, just wanted to say definitely just happy to be a part of the team. Happy to have come on and subbed in for Joey for this week. And all I want to say from a marketing side is our efforts to communicate with our customers with not only existing investors but potential investors. Definitely something we're focusing on going forward with the communication side, but also a bit of fun, right? We had the Monopoly Man video just surpassed 200K. So that's a bit probably of a sneak peek as well as to some of the other fun content that we have coming up on the platform and on our socials. So make sure to follow us across the board: TikTok, Instagram, X, and LinkedIn, obviously. And you won't be disappointed because we have some really cool stuff cooking right now.
Perfect. And with that, I'll say one last thing too, and that is we are absolutely maniacal about updating this to make it the best absolute investing experience for you all. So if you have any questions, anything at all, feel free to reach out to us over LinkedIn, over Zendesk, over email back to the email that sends you the marketing email, whatever it might be, because you might just see an update that comes across that was from your direct feedback. And so that property update, we can't thank the investor enough who reached out to us and said they wanted to be more updated in real time. And so we immediately implemented this live stream on the properties. We're happy to do that, and we really want to do that for you all, because just because something isn't being broadcast doesn't mean things aren't going on really well behind the scenes. So feel free to reach out to us, give us any comments, questions, updates, anything, and we'll do the same and be very reactive to them.
Amazing.
So thank you all for joining, and